Jim was just mentioning, between the store closures and supply chain, it does feel like you think that's going to get better in the current quarter.
Yeah, our supply chain was closed from mid-March to mid-May, and this is manufacturing in places like Massachusetts and Ireland and India. And those are all reopened, and we're now supplying the marketplace. The demand has been incredibly strong, up 18% in the United States, our POS or sales to the consumer, and globally up high single digits. So we have strength to strength from our games business and our Play-Doh business, our Nerf business, and other brands as well. It's been a consumer demand story, but clearly between store closures, what's going on in Latin America, and then our supply chain, we've been challenged to meet that demand. So our weak supply and retail inventories have declined by nearly 20%. There's an opportunity now in the second half to launch our new initiatives and to continue to drive consumer demand.
We've talked about China risk for the toy business in general for a couple of years now, really. And I wonder, every incremental headline, whether it's about a consulate or new visa restrictions or the Fulbright scholarship going away, does that send a chill through the toy business? How does supply chain get better in the wake of all that?
Well, first, over the last number of years, we have diversified our supply chain. We're now about 55% out of China, and we'll head to about 50% by the end of the year. Having said that, we have great content partnerships in China for brands like Peppa Pig and for Transformers. Our Transformers TV series that's particularly suited for the Chinese market, using Chinese and Transformers characters, launches next year in 2021, Transformers Nezha. Our business there was clearly challenged in the first quarter as our Chinese licensees on brands like Peppa were not performing as well. But as we entered the second quarter, we started to see POS increase for the Chinese consumer, and we're hoping to get back on track as we go forward. But clearly, it's an area where we have to be very good partners and thoughtful about the business, how we grow that business go forward.
Brian, you seem optimistic about the third quarter and the outlook with regard to your supply chain and demand. But how is that playing a factor with regard to some of the recent spike in coronavirus cases that we're seeing? Are you concerned that we could see a repeat of the spring this year come fall with a potential for a second wave or continuation of a first wave? And how would that impact your business?
Yeah, our partnership with many of our retailers, the way I'd look at the third and fourth quarter in many ways, it's sort of a reopening or restart. So beyond our big customers, Walmart, Target, and Amazon, that have been open throughout and performing incredibly well, we have smaller toy specialists and other retailers that are just reopening. So we see it as an opportunity to bring new initiatives to them in the second half of the year and to have a good holiday season. But again, we continue to see the acceleration of e-com and omnichannel, and including in omnichannel is buying online and picking up in store, buying online and picking up curbside. So we believe those effective techniques are things that the consumer enjoys, and they're going to continue to want to be involved in that, to be able to pick their product up there. If we were to see a continued challenges at brick and mortar retail, we could flex to have e-com be even a higher percentage of our business. In fact, a very high percent of our business, given the capabilities, techniques, content to commerce that we've built over the last number of years as a digital-first organization.